What's up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about another Choch fake out. Now, previously last week we've talked about another Choch fake out. All right, if you guys don't know that Choch fake out, go ahead and refer to this video right over here. I'm going to have a link to that video. But in this video, we're going to talk about another Choch fake out because a lot of the times I get a lot of questions about what is a true Choch, what does a Choch look like, you know, and a lot of people are sending me their screenshots in terms of, you know, what a Choch is, what does a Choch look like, right? And a lot of the times I see a lot of people get it wrong, but then a lot of the times I do see people get them right. But I want to clarify in this video what a Choch fake out looks like, or what a Choch doesn't look like in this video. As you all may know, that Chochs are just structure, and if you know structure, if you know how to map out structure correctly, you're going to know how to map out a Choch correctly. So all in this video, guys, so stay tuned. All right, so in order to identify what a Choch is, you need to be able to understand how to identify and map out structure, okay? So let's begin here. So once we're seeing when price is bullish like this, all right, and then we're waiting for prices to retrace like so, okay? We all understand that we need to be buying off of an area of demand, right? So something like this, okay? And then we all understand that once price gets to an area of demand like this, we need to be looking for price to break a new high like this, right? Now this is what's considered the Choch, where prices break a new high, right? Then prices come down to an area of demand like this, and then our expectation is to look for buys right over here and then carry price bullish like this, right? Now in some scenarios, the Chochs aren't effective, right? And I'll tell you why. Sometimes prices, when you buy here at a Choch, right, price just goes bearish like this, and you're thinking to yourself, why in the world did this happen, right? Like, I was following everything, I was following structure, so forth and so on. Now this can be a little misleading because sometimes a Choch plays out correctly and sometimes Chochs don't play out correctly, and I'm going to show you why here. So when prices came and retraced, right, sometimes when prices are retracing like this, right, the real break of structure happens to be this, right? We're going to follow the main order flow bearish like this, right? And this happens to be like a small structure, right? Where price comes down here like so. This would probably be a better example like this, like that, right? So you see that the main order flow is pushing bearish, right? But then between this high and this low, there's new structure creating like this. And then when you're thinking to yourself, okay, price broke a high, now I'm looking for a buy. Well, what we're all misunderstanding here is we need to be asking ourselves, who's controlling this part of structure here, right? Who's actually in control? Well, it's this high and this low, right? This high is actually controlling all this information here, and what's happening is price is creating internal structure to push price bullish like this, right? But instead we find out price comes over here, mitigates something, you know, an order block here, right, and then pushes price bearish. Now this is what I wanted you guys to be aware of when prices are doing this. Now the only way we can identify this as a true buy is if price actually breaks this new high, right? At the same time, when prices are doing this, right, showing us internal break of structures like this, you can see now that the order flow is pushing bullish, right? This gives us some sort of a guarantee, right, that prices are indeed looking to push bullish because prices are respecting this low, and yet the order flow has just started internally here between this high and this low here. All right, so don't make a mistake when I'm talking to you when I'm telling you about this, right? What our intention is to look for the main order flow pushing bearish. The main order flow is this high, this low, this high, this low, this high, and this low, right? And the way you can tell the difference is by between the big breaks and between the big retracements, the big pullbacks, right? You can see these pullbacks are very significant compared to this small pullback, okay? This small pullback here is only controlled by this high and this low, this range, okay? But now once prices are starting to push bullish like this, we all understand when prices are showing us order flow, right, and prices are breaking and mitigating, which is showing us order flow, that gives us some sort of a guarantee or some sort of confidence that price should push bullish like this, right? But now, is it safe to say that we should be looking for buys here now just because prices is showing us order flow? Not necessarily, because prices haven't broken this high. So how can we guarantee that this low here will go and push bullish to this high here, right? Normally when we're buying from this low, we're looking to target our current high right over here, right? Because we know that prices come to areas where prices has already been, right? So when prices are when you're looking to buy here, it's not safe to say that prices should just push bullish here, because we haven't yet broken this high, right? The only way we can actually break this high is just wait for prices to do this, right? Push price bullish like this, right? Or push price bearish, and this will tell us, and this will signify and tell us whether prices are bullish or bearish, right? At the same time, we're following this main order flow that's pushing bearish, right? Notice what's happening here. In order for this to be a real chock, a real clean chock, price has to break the actual high that broke this low, right? Not this low, because this is just internal structure between this main high and this low, like so. Okay, so once we get that a firm confirmation that price broke this high here, like this, okay, can we only then have more of a guarantee and more of a we can lean more into this sort of structure, right? We can lean more into this and get more confidence that this is the low that broke that high, right? Everything else that you see here has been mitigating, and this is the low now that broke that high, to the point where we can look for to look at buys like this, right? And then we can lean on this and say that this is our demand right here, right? Put a limit order or whatever, a buy limit or whatever, and then look to target this high, and that's how you trade. That's how you trade the chock, right? Now, obviously, this is just one little scenario that we've been teaching. But in the previous video, in last week's video, we've been showing that how prices vary. It's very much so like this. You guys can obviously go and refer to that video. I'll put a link above. It just follows something like this, where prices are bullish, like this, right? Then prices are coming back down, right? And all of a sudden, this is what you're getting, right? You're looking at a chock, and prices are doing this, right? Coming up, coming down like this, and everything is so noisy, and you don't know what the heck is going on, right? And you're telling yourself, but I thought it was a buy, but oh, I guess now it's a sell because the prices are breaking a low like this, right? But all of a sudden, prices are breaking high. You're like, what the heck just happened, right? Like I thought it was a buy, right? But then now it looks like a sell, right? You don't know until price is affirmatively breaking a structure, the main structure, right? The main structure high in this case, right? It has to be breaking the main structure high, right? At the same time, we also look for two breaks of structures, because two breaks of structures gives us a guarantee that prices are pushing bullish, right? We had an area where price respected the low somehow, right? Especially with this, like this, all this huge low right here, had some sort of liquidity sweep from this low, right? But it kept taking out more liquidity, right? Preparing for that next move, whether it's bullish or bearish, right? What price is doing here, it's expanding, right? It's just sort of showing so much expansion. It's also consolidating, right? This is in order for the banks to give us, in order for the banks to find out what direction they're going to take. They're building all this liquidity to either take you to take you bullish or bearish from here, right? So that's on the previous last week's previous video, right? So I want to show you guys, obviously, in the live chart to see how you can identify this and how you can prevent from taking the wrong trade when you see a chock. Okay, so let's look at the next slide. Here we are on a live chart example. We're going to start on the 4-hour time frame, right? And then we're going to look at where our areas of supply are first. Okay, so now I obviously pre-marked these out just so I can show you guys theoretically how this works and to prove my theory, obviously. So some of you guys may be saying I'm cherry picking. Well, that's because I'm trying to prove my theory for you guys. Notice that every time when this theory doesn't happen all the time, but it happens sometimes. So that's why I want you guys to be very aware of this scenario. Okay, so let's start with the first one over here that we see right here. Okay, we're going to start with, there's two of them right here. Okay, so as we understand, when prices come to an area of supply like so, we're going to start with this first one. You're going to see how a chock may be this chock here may be a fake out chock. Okay, so let's go down to the 30-minute time frame, right? So a lot of you guys may start anticipating, as soon as price tags your supply zone in this case, you immediately see that there's a chock right there, right? And you're thinking to yourself, okay, well, I'm looking to target this supply, right, in order to go bearish here. And once you're doing that, right, notice what's happening here. Prices aren't reaching that area at all. And you're thinking to yourself, what's happening? Why am I not able to enter the markets, right? So this isn't considered a fake chalk out, or a chalk fake out, excuse me, right? But it is, what I do want you to see clearly here is how can we identify where that true low is, so that way we can take advantage of the markets. Okay, so here's how you do it. All right, so when you zoom out, right, you want to look at the internal structure in here. You want to see where did structure start, right? It started from this low right here. As you can see, there's a low broken there, a high broken here, another high broken here, and another high broken here, right? Now let me make this a little more cleaner for you guys so you guys can see, so that way we can talk about exactly so I can prove my point here for you all. Okay, there we go. So here's another break right there, right? That just a bit above right there. And you guys have to really be very clean on these breaks of structures, because breaks of structures are very important to us, because they indicate and let us know who what low or high, or what higher low broke the break of structure, right? The BOS, the high or the low. So here we go. Once we have another break structure there, right? So then right over here we have another break as well, right? So now we ask ourselves, who broke this this high over here, right? Right when this price mitigated, which higher low broke this structure here, right? Well, we can see over here, right over here, you can see that there's another indication of structure that's happening, more internal structure. There's a break there, there's a break here, right? You can see a lot of order flows happening to the a lot of order flow happening to the upside like this. Okay, now we see that there was a high, there's a low, there's a high and a low, but more importantly, we want to know who broke this high right here. Okay, this high will indicate who broke it, right? And you can see that when we map out the structure like this, we can see it was this low right over here. Let me just zoom in here to show you guys. Okay, it was rather this low right here. Okay, right there. All right, so now what we want to see here is who actually broke this main high, right? This is the main high that we're concerned of. We're not really concerned of any of this internal structure here. I just want to show you guys that there's order flow pushing to the upside, right? The main higher low that's that violated the structure here was this right over here. Okay, so now we understand that when the low has been broken, now we can see the clean chalk, right? Now we can see a clean chalk here. We're not looking at this high here, right over here, right? Because this is nothing at this point. Price just this low here is controlling all this huge move here, right? So if we're looking at a chalk here very early on, this internal structure here, based off of this move, there's no knowing if price is going to ever go bearish here, right? Even though we're targeting an area of supply, sometimes if you're taking a sell-off like this, price can just go bullish like this, because now we know that this demand is the one who broke this high, and it can continue order flow bullish like this, right? So we're concerned of seeing where that last break of structure was, and it was indicated there, right? So now we can map that out like this, right? And now we want to be very keen on finding the exact higher low, lower high. Okay, so we can see here that price is going, the order flow is pushing bearish. You can see break, mitigation, break, mitigation. We can also see this area that wasn't mitigated, so this could be an inducement to the market. Inducement to the supply zone. All right, we can also count this in as well, just in case, because sometimes inducements are tagged and they go. They actually go, they go. Let's play this on and see what happens here. Okay, now we can see that since the since structure here was broken as well, we can now adapt to new structure, right? We can see that this high here broke this low, so we can adapt and sell off to right over there, right? Now, let me just explain what happened here, okay? I know I'm going a little too fast here, but let me just explain clearly. So the reason why, we don't know the reason as to why price never come up here, right? We never know what the bank's intentions are, or what the market's intention is to go up there to a supply zone or a demand zone is, right? I mean, we know their intention is to mitigate that area and then close their last order, right? But the banks don't have to do that. They don't have to do anything, right? Because they have so many orders open everywhere in the market, right? But what we can do is start adapting to structure based off of what the bank's intentions are, you know, essentially. You know, when prices are breaking like this gives us some guarantee, a lot of guarantee, not some guarantee, that prices should intentionally continue moving bearish. Okay, so this would have been a good area here for us to look for sells based off of structure. Okay, notice when I said, actually I see something here, I just caught myself while I was talking. Here is where that sell would have been right there. There's that wick. Let me just zoom in here kind of quickly here. Okay, right here, there's this wick right here. There's a buy to sell that happened right over here. It's also famously known as a flip as well, right over here. So this actually could have worked out for us as well. So if we drop down to lower time frames like this, let's go to the 30-minute. Okay, notice where we touched. Okay, I do clearly see it right there. Right there. So this is where prices would have tapped us, and then we could have sold off from there. Okay, only because this was the true low of this low to this high, right? This is the true break of structure, and then this is how we indicate that price should go bearish, right? Now, of course, it's not wrong to look for sells over here, right? For selling opportunities here, but how would we know if price is actually truly selling when price hasn't even broken this low yet, right? For all we know is price could just tap this demand and then push bullish like this, and then you would have been in trouble, right? So what I like to do in this case at RoyalBluFX is to have better confirmation. We want for higher probable trades to happen, right? Higher probable entries, right? And higher probable structure. In this case, the structure that you just saw right here, right over here, right? After that break of structure, we identified this as the flip, as the buy to sell that has happened, and that's where the price sold off, right? And you can just obviously wait. If you're not comfortable in taking areas of entries like this, or finding this as the actual structure, just wait for price to for the markets to break a new low, right? A new low guarantees that the price should continue bearish and continue the trade, you know, to the downside, right? So you could have obviously comfortably taken a sell like this, right, with the risk right above, right, and then look to target your current low like this, right? And this is what tells us again that we can confidently just stay in these markets, in these trades like this, because structure has already been broken on the higher time frame, right? This is how you mark out structure. Okay, now let's look at another example here. I had marked out right here. Okay, so notice this high. There's a high here. Okay, there's a low, a major low that has been broken right here. Okay, we want to ask ourselves, who broke this low? Well, is that major high here? And the reason why is because there's unmitigated candles, right? Candle over here, right? So we're going to wait for price to get there. Let's go. Well, let's just kind of play this out a little bit quicker to show you guys. Okay, so once price got there, right? Now what we want to do is drop down to the lower time frame. Okay, and here's the funny thing. Okay, once the market you know, once my Wi-Fi doesn't. All right, sorry you guys, my Wi-Fi just froze, and it froze the whole page here. Okay, let's continue. So once price tags our supply area here, right, a lot of you would be rushing into getting into this trade right here, right? Because you see a chock that happened like this, right? You see that there was a high broken, and now there's a low broken, right? And then theoretically speaking, of course, you can look for sells here, right, and just start selling it off, right? But there's no guarantee that price is going to sell off from here, just like this, okay? Because we're still pushing bullish. If you look at this internal structure, price is still pushing bullish, right? So if you were to look to sell this off, right, that minimum you should probably target this low here, just like this, right? But I want you to see what happens here, okay? Watch this. So once this happens, right, notice what happens here. You just sold off the market way too early on, right, looking at a chock, but you were just taken out right over here by the wick, like this, right? And this is really dangerous because obviously nobody wants to lose money in the markets, right? We don't want to just start assuming that that is our chock, even though that is a valid chock, but it's not a chock that validates within structure, with structure that we're looking to map out here, okay? So let me show you again how to do this, okay? You can see that we have price going bearish here, not price pushing bullish. We want to identify where that last structure low was, okay? So once we see over here, you can see that there's a high here, okay? We say who broke this high here? It was this low over here, okay? Then we want to ask ourselves, since price broke this low here, right? Price came back and mitigated, actually, price came and mitigated this little area right in here, okay, right there. So now we ask ourselves, okay, well, who broke this high, right? It was this low. So now what we're waiting for is for this low to go, okay? We're waiting for this low to go because this is the last higher low that was created, right? So until this breaks, that's when we can look for prices to sell off, and we can look to take opportunities in the market, right? So notice what's happening here. Prices are reacting off to this demand area, right? Because we're bullish, but we're also bearish, okay? But bear here with me. I'm going to explain to you what's happening here once price comes down, okay? Watch this. So prices are going bearish, almost. Let's play. There we go. Okay. Now here's where prices broke, right? We ask ourselves who broke this low. You can see a flip that happened here, right over here. All right. Let me just kind of situate this better from here to there. If I can see my supply zone, excuse me. There we go. There we go. Okay. Now we just wait patiently for price to get there. All right, and notice what happened. We just tapped our supply zone right there, right? Right here. Right? Something like this, right? This is much more of a safer way to take these trades, because if you want to understand, guys, okay, what we're trying to do here is take take high probable setups, high probable trades, right? And that happens to be with structure. Structure is king above all, okay? Make sure you follow these correct rules, because if you follow these correctly, you're going to understand that we are able to take advantage of the market so easily by just understanding pure structure, okay? So as you understand and see here, this was our true chock from here, okay? From this high to this low. That was our true chock, not up here. Even though up here has still a high potential based off of the supply zone, right? Right over here. But how do we, again, ask yourself, how do we know that price here, okay, isn't just going to go push bullish, right? This is what I want you guys to see, okay? So as you see here, everything worked out for the best for us, right? And then price moved on its own dandy way, okay? Let's go to this one kind of quick, right over here, and then we're going to go, and then we're going to stop this after this, okay? So let's cut the market over here, okay? All right, watch this. So once price goes up to the supply zone, right, again, we're looking for prices to, we're looking for a chock, right? This is what your average person would do, right? So you have a chock from this high, like this, and another chock from here, this low, right? And then as you can zoom out, how do we identify where that last low was, right? Well, if you zoom out, you can see that structure has been bullish from here, right? We start mapping out structure like this. You can see it. You can see it very clearly, like this. Excuse me, this is a very bad drawing, but I just want to show you guys, right? Like this. Okay. Now we know where that last higher low was, right? This last higher low was built over here, right? Everything in here is just a part of this this higher low over here, right? It's all a part of this. It's more internal structure within internal structure. Okay, so we know that this low has to go, right? And once that low goes, we can be safe to look for a potential sell, right? So again, this is way too early on to look for sells. I'm not saying that chocks are bad to sell, but you got to be looking for the correct chock, okay? So let's look at this here. Prices are bearish. Okay, here we go. Okay, so notice what happened here. We ask ourselves, who broke this low over here? Right? Who broke it? It was this high over here. Okay, so notice how price never tapped over there. Okay, it's leaving us an inducement at this high over here. Okay, and now that we have to, now that we see a safe break of structure, right, and a clean chock on the higher time frame, now we can look confidently to come and sell off of this high, because this was the last high printed within this low, right? So let's do this. Let's go see what happens here, and then we can target the low over here. Okay, and this is how you guys can capitalize on this. This is a very high probable setup in the markets for anybody that can take this and utilize this. Okay, let's go see what happens. Right, price goes up, taps us in, and then we go. All right, this is how it's done, guys. Okay, so I'm hoping I'm proving my theory here for you guys. I'm hoping you guys understand that you know, it's not the best scenario to look for internal structure chocks like this. We want to look at the main structure, the main structure's direction, right? The main structure direction right now was pushing bullish. We want that low to go, and we want to take advantage of that low once that low has been broken. This was the last high printed, this little this order block right over here. Okay, right there, and that's where we sell it off, right? This would have been a good, what, 18%, 18.2% in the market, right? And guys, that's it, okay? So I hope you guys enjoyed this video. If you guys really enjoyed it, please leave a huge thumbs up on this video, and please definitely comment on our comment section below, and definitely subscribe to this channel, because we always give out free content. Guys, I love you. I will see you in the next.